Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for August 22nd, 2011. This is Patrick Ceresna. As always, we start off with the S&P 500 using that spider exchange traded fund symbol SPY. We had that retracing rally into a flag up towards the 121.50 area on the upside, and subsequently a very quick reversal on that back down. There's a number of scenarios that will play out. One is obviously just a double bottom retest of 110, 111 on the downside, but also just another leg lower, which could test the lows around 104 and 100 on the downside, where all the flash crash lows occurred on the downswing. And while we right now are starting to look at the scenarios that this is going to turn into a much bigger bear market, I do want to remind everyone that bear markets are prolonged over many months, if not years, in duration, and they happen in numerous waves and cycles. And this current wave down is getting very long in the tooth, and even though we probably could see even as much as 10 spider points on the downside in a very rapid succession on the short term, I wouldn't be surprised within a week or two if we've seen the swing low to this sell-off before we see some sort of robust retracing rally that could easily come back up to 120 to 125 on the upside in over the subsequent month or two. So while we have an immediate bias to downside, and the downside certainly can be very painful, we are probably getting close to a tradable bottom. When we take a look at that ISE US Regional Banks Index, which is a symbol JLO, we were talking last week about how there was little to no follow-through on the bounce that followed that short-term low. Really at this stage, that failed rally attempts and now subsequent reversal to new lows really just has a distinct momentum on the regional banks downwards, and we could definitely see 16 and even 15 on the downside very quickly this week as it goes downwards and to bang out some sort of a short-term low. But the theme is the same with the S&P, that even though there's some immediate downside risk, and certainly could be over a few days very painful, we probably are much closer to a short-term low in terms of a time frame perspective than we were several weeks ago. And really at some stage we're going to get some sort of a bounce of significance, but it probably still is going to come off of lower levels, so don't be too eager to buy yet. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all those casino, tobacco, and distiller companies. We had a proper Fibonacci retracement up towards that 128, 130 focal point on the upside, and a subsequent reversal. At this stage, just like the whole markets, there's room for the Syndex to not only retest its 113 lows, but also finish off a move down to the 107 or even the 100 levels, where all of those flash crash lows reside. So there's definitely room for there to be another wave of weakness, but that will probably down in those lower levels emerge as a buying opportunity. Next year, I want to take a look at that ISE Home Builders Index, which is symbol RUF. Just like those regional banks, we've had little to no follow-through rally, and now the sell-off has already broken them to lower lows. This is a place where there's been predominant weakness, and the downtrend is very predominant. Another dollar on the downside is very realistic, down towards that 450 to 5 focal point down below before we really start fishing for a trading low. Next year, I want to take a look at that natural gas index, which is symbol FUM. The natural gas index is certainly playing out very similarly to even the Syndex or the S&P. We're about to break to a lower low here as we approach that 106, 108 level. If we don't see double bottoms along the downside here, it would be a very quick drop down to the 100, 102 level, or if there was a really good robust sell-off cycle, we could see even a low down at the 88 to 90 level. Again, I do believe that this index will be a buying opportunity at some point, but more than likely off of still lower levels before you want to dabble into buying any of this. Finally, I want to take a look at that ISE FTSE 100 index, which is a symbol UKX. The FTSE tried to rally and immediately reversed back down. There's plenty of room for the FTSE to continue to deteriorate. Very important support levels lie down in the 470, 480 level on the downside. But if there's any really robust selling, we could even see that level give out to the 460, 450 area where the measured moves lay on the downside. But nonetheless, we're still first looking to see if that 470, 480 level is where that short-term bottom is banged out. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.